Hello, hello, hello. Yesterday, I sent out an email to my database and I briefly just touched on some of the changes from CMHC, so Canadian Mortgage Housing Corporation. So today, of course, I talked to David Yuzpe, the wizard, and I asked him, can we just jump online and talk a little bit more in depth about what this really means? So, David, let's go. Hello, caller. You're on the air. David Yuzpe, here we go.
Hi, Jenna.
Hi, David.
How are you today?
Oh, I'm awesome, especially because I'm talking to you.
Oh, listen, listen, I'm the lucky one here. This is all good.
So for those that don't know you, David, why don't you just tell them quickly who you are, and we're going to dive right into the changes that are happening with CMHC.
Sure. Hi, everybody. I've been a mortgage broker in London and the area for almost 27 years now. Spent years teaching the government courses for the licensing, and have a pretty good handle on the market and how it's going. And, really have become a go-to for many of the realtors out there. And especially when there's an issue, it's call David. So
Absolutely.
Jenna, thanks for the opportunity to speak to your audience. And I do appreciate it.
100%. David is the go-to. He's helped every single one of my clients, and he even got a mortgage for Brett and I, which, wasn't easy, let's be honest, right? Okay, so first-time home buyers out there, people who are thinking of selling, they might be thinking 2020 was their year and then COVID hit. Oh, we should wait. We should see what happens with the market. And obviously, we want to gather as much information as possible so we can make educated decisions. And this week, CMHC, Canadian Mortgage Housing Corp, and CREA, Canadian Real Estate Association, they announced some pretty heavy news. So let's dig into that from your perspective, David.
Okay, so I'm gonna kind of give you this in brass tacks, and I've also spent some time yesterday and this morning doing some pretty specific calculations, so I can give you some specific examples. Now, those are obviously going to change, so your audience is going to hear different things when it comes to incomes and number and whatnot. But they can always reach out to me. And I can run calculations based on their specific incomes or scenarios or debts.
Perfect.
I'm going to start off with CMHC, because you got to remember there's 3 different mortgage insurers. CMHC, as you said, Canada Mortgage and Housing Corporation. There's Genworth and there's Canada Guarantee. We do not know if Genworth and Canada Guarantee are going to follow, or if the government's going to force them for what they call mortgage default insurance. Okay. What we're talking about specifically are for any of the buyers that have less than or are doing what's called an insurable mortgage with a non-traditional lender. So they're still low rates, but they actually have to buy the CMHC insurance, but it's at no cost to the client, but that does keep the interest rate down in many cases. So here's brass tacks. Up until July the 1st, which is when this is all going to change, we've been able to use something called debt servicing numbers that are higher than what they're changing to. In English, 44% of your income today can be used for principal, interest, taxes, heat, and your debts, and 39%. So it's 2 different calculations, which would exclude the debt. Now they're actually reducing the numbers to 35% and 42%. How does that translate to something that we can all understand? I'm going to give you some assumptions. The stress test that we've been hearing about for a few years today is 4.94%. The property taxes that I'm going to use is going to be 0.8%. So there's some continuity between my comparing apples to apples. Okay. If your client, or you out there, if you earn $60,000 under the current, or I'm going to say current and old method of qualifying, you would be able to qualify for a maximum purchase price of $290,000 if you were putting 5% down.
Okay.
That's assuming no debts, okay?
No debt, yeah.
On July 1st, based on the rule changes, the maximum you would be able to buy would go from 290 down to 258,000. That's a reduction in buying power of 11.1%. Yeah. This is huge. If you're looking to maximize what you can spend now in this crazy market, you have until June. Where's my calendar? I don't know. The last day of June.
Last day of June.
Purchased and submitted or you're going to fall under the new rules.
Right.
The other major change is they've increased the minimum required beacon score. So your credit score, that's been increased from 600 to 680.
Yeah.
At least one buyer, not both buyers, but that is an absolutely astronomical increase. So I encourage you, please talk to not your bank, a mortgage broker that will pull the Equifax Bureau, have that score right away so there are no surprises. And Jenna, I think we both live by the same thing, the no surprises rule, right?
Absolutely.
We don't want surprises. Surprises are when the bank or somebody is calling me and saying, can you help my clients? We can't do it.
Yeah.
So we don't want surprises. It's get in touch with your broker, not one of the bankers, just because you know you're going to get your score. That in a nutshell, it changes. I don't know how to tell you this, but these changes in the middle of a pandemic, and when we're trying to bring the back to life, they're scaling it back. And to get into the macro and the microeconomic why, I'm not sure why we would do that.
Yeah. Yeah. So in summary, if you are thinking of buying, you should probably do it before July 1st, right? Debt service ratio has changed. Credit score has changed. Ultimately, depending on your income, the amount that you could have afforded in terms of a purchase price is going to decrease. So we got to get you in. And it's just as of today, like this is what we know right now. And obviously, if we've learned anything from COVID, is that things change all the time. But this is what we're being told, right, from the greater powers that be. So the housing market is definitely gonna change here.
Yeah, I mean, my real opinion is that there's a huge discrimination against the first-time buyers and the people that are out there working. I mean, even if you take our young teachers that are coming out their first year and their first contracts, they're under this $60,000. And even though we know that when they get to what we call an A410, that at some point they're going to be making $100,000 a year, they're not taking projected income and future earnings into consideration, regardless of your employment.
Right.
So this is this is what we've got now, and this is how we're doing it now, kind of thing.
Right.
For those that are a little more conservative, that would never spend near their limit, you know, there's going to be less impact. And the other thing is you know, I used $60,000 as an income as an example. There are some moderate changes when you get to 70, 80, 90, 100, because there is more money to play with. But I would like to kind of come back to the point that you made, Jenna, where when we take that kind of that 200 to 350 market, that price range, you're going to squeeze a lot more people or compress a lot more people into that because of the reduction in what we're going to qualify for.
Yeah.
And that's the case. You're going to have more offers, not fewer offers. It's going to make it more difficult to buy. So please, everybody, get out there and you know, start looking, and please make sure that you get properly qualified. And what I'm doing as of today is I'm actually qualifying you pre-July 1st and post-July 1st, so you know the difference. I'm running all the numbers, so you're going to know where you stand at any given time. I'm pretty sure not everybody will be doing that, but I am doing that as of today.
Because you're amazing.
Well, thank you.
All right, guys. Well, if you have any questions about whether to buy or sell or what's going on with your rates, and you want to look at what do you qualify for today or what do you qualify for after July 1st, get in touch. We would love to talk to you, and I hope you have a great day. Thanks, David.
Thank you, Jenna.
Bye, guys.
Bye-bye.